I'm going to share with you guys a simple 5-step trading strategy that can make you your first $500 every day consistently. And this same strategy offers a setup that shows up in the markets week after week. It's not going to show up every single day, but if you look well enough, you will see the setup form every single week when you're trading indices like US 30, NAS 100, and my personal favorite, the S&P 500. If you are serious about your education as a learner, make sure you subscribe to my channel and like this video. And personally, I would recommend putting away any distraction. Also, if you guys want to work more closely with me, check out the link in my description. Now, without further ado, let's get into this video and let's make some money. If you are new to my channel, I just want to say what's up. My name is Colt. Make sure you follow me on my Instagram right here so we can connect more closely. The first step that we need to do is we need to go to tradingview.com, obviously. Now we need to go to this button right here that says watch list, and we need to go to the plus sign. Once we do that, we are going to type in US 30, and we want to add US 30 Owanda right here. Once you add that, you're then going to add NAS 100, same thing, NAS 100 Owanda, and then the last one you're going to add SPX500 Owanda. Now I have all of them right here on my watch list, and let me explain which of these you should be focused on, from the most volatile to the least volatile. US 30 consists of the top 30 companies in America. It is an indice. Secondly, we have the NASDAQ, NAS 100. This consists of the top 100 tech companies in America. And then we have the S&P 500, my personal favorite, that consists of the top 500 companies in America. Now, the thing that I really like about all these indices is they're mostly always in an uptrend. And I prefer bull markets over bear markets any single day. So that's a great thing. You can see the S&P 500, it's actually breaking all-time highs right now. Same with NAS 100. And same with US 30. So the first thing that you want to do when you're looking at your charts is figuring out what type of trend are we in. When we go and look at the daily time frame, we can see that we are in an uptrend. Now, before we move to the next step, let's go to the minute 15 time frame, and I'm going to give you guys two indicators that I use. The first one is the sessions indicator. So type in sessions and add this one right here, sessions Asia, London, New York color. The next one that you're going to add is just the Asia ranging kill zones right here. Once you add those two indicators, they will appear right here and here. So if we go to the settings for the sessions indicator, all I want to have checked off is the New York session. Once you do that, you can go to the color and the opacity and make it whatever color you want. I don't want it obtruding over my candles, because look at if it's at 100%. I don't like that. So that's why I have it simply at 10%, and it's very minimal behind my candle. So this indicator right here is showing us where the New York session is, and this is the session that we're going to be trading in. Secondly, you want to go to the kill zones indicator right here, and all I'm focused on is the Asia range color. I have it in gray with the opacity at 31%. And we can see that right here is our Asia range. So this is showing us where the Asia session is. Step 2 is going over the time frames and the times that we are going to be trading. The time frames that I am on are going to be the minute 15 in the 5-minute time frame. If you guys go right here and you click this little star next to it, it will favorite it to make it easier to switch through time frames at the top right here. So as we're looking at the 5-minute, we can see each candlestick represents 5 minutes and the minute 15 represents 15 minutes. Now you're probably asking me, Colt, what are the times that we are going to be trading? And I'm going to write this out for you guys right now. Before we get into the times, I want you guys to make sure that you have your time zone set to New York. We want to be in confluence with the stock market in New York. After you do that, we're going to now look at our times right here. And the times that we want to be trading are 9:30 a.m. to 10:30 a.m. If you guys are new, at 9:30 a.m., it is the market open, meaning that is when all the volume is being injected into the market and we're going to see some really nice moves. So I like to give myself an hour time window to trade because this is when the most volume is going to be in the markets. And when we have the most volume, that means that we're going to be seeing the biggest moves occur. Now let me show you guys on my chart where the market open is. You guys can see right here on this candle. On the bottom, look right here, we'll say 9:15. This candle right here opens at 9:15, closes at 9:30. Right around this time and all the way till this candle right here, this is our last entry candle. We want to be looking in here for one specific setup. Now I did tell you that I'm using the minute 15 time frame and the minute 5 time frame. If you're smart, what you can do is use these time frames in confluence. Maybe you might not see a setup on the minute 15, but the minute 5 might present an opportunity. So if we go right here to this little button, select layout, we can have two charts at the same exact time. So we could have our right chart be on the minute 15, okay? Then we could have our left chart on the minute 5. So we can compare the charts together to give us confirmations. This is something that I like to use. If you don't have like a big monitor to add the charts to, this will work perfectly fine. Now let's just go back to the minute 5 time frame and I'll show you those times. So I want you guys to take your attention to this candle right here. From 9:25, that's when the candle opens, to 9:30, right at the market open, this is when this candle closes. So when this candle right here closes, it is the market open. Look at all these little candles right here. They aren't too big in size, but then notice this candle right here, how it has a really nice push up. So this candle is the market open. And here's a little trading tip for you guys. This isn't 100% accurate. At the market open, what you could usually do is look at what the previous candles are doing, and the market is pretty much going to do the same thing. So if we see a bunch of bullish candles like we did here, the market open candle is most likely just going to keep pushing up. Now let's go into step 3. Now this is the setup that we want to be looking for. If we are seeing a downtrend in the market, we want to see price make a lower low, and then we wanted to see it make a lower high. Now our lower high is where we're going to be looking for an entry. And to make that entry even more verified, to add another confluence, what we could do is look for some type of reversal candle in that lower high. Doji, spinning top, shooting star. I have a video that goes over all those candlestick patterns that I look for. Just type in Colt candlesticks and it'll pop up. Now the second one, if we're in an uptrend, we're looking for price to make a higher high. And then, now this is the setup that we are looking for. We want to see price on the left. If we're in a downtrend, make a lower low, and then we want to see it make a lower high. Wherever the lower high forms, that's where we're looking to take an entry. There's two things that I use to help me get entries at that lower high or the higher low, and that's looking for a reversal candle or it to hit a key level on my Fibonacci's, and I'll show you on my chart in just a second 2 of those examples. And the second one, if we're in an uptrend, what we're looking for is price to make a higher high and then to make a higher low, and our higher low is where our entry is going to be, and then we want price to make a new higher high. Now let's go to the chart and I'll show you an example. Here we can see a higher high, then price forms a higher low. Notice how this low doesn't go as deep as this low. We do not want to see the higher low go deeper than the previous higher low. So we can see that this is valid. We have a higher low, then price pushes up right here, price forms a higher low, and then we can see price form a new higher high. This is exactly what we are looking to see in the markets, but how do we tell whether it's going to be a good buy or sell? Let me show you in this setup some of the confluences that we can add up to give us extra confirmation. If you guys go to the left and you add your Fibonacci retracement, once again you can star it so it's saved up here and it's easier to go to. You can click this and put it on the chart. Now before I put it on the setup, let me give you guys my settings. If you guys go to the settings tab right here, you want to take a screenshot right now, take another screenshot right now, and then take a screenshot right now. These are all my Fibonacci settings, and I'm going to show you how to use this tool. So what we're overall looking for when we're using this tool is we want to find the previous low or the previous higher low, then we want to go to the next higher high, and then we want to extend into the future. So ideally, let's pretend that this is what price was doing. And once again, we want to be at those key times. We're on the 5-minute time frame right now. After this candle closes, it is going to be 9:45. And it's crazy because both of our confluences are in this setup right here. So we do have a shooting star candle, which I go over in my candlestick video that I told you guys about. Definitely check that out. So what we're looking for, and this is super important, is you guys see those key levels that say 0.62, 0.705, and 0.79? Those are our 3 key levels that we want to see price go to. You can either have pending orders right there for a buy limit or a sell limit, or you can simply set an alert, or you can watch it and see when it hits those levels. So when price comes down to these key levels right here, what we want to be looking for is to be buyers in this higher low. So that's how I use the Fibonacci. And what's even better is if we can see a reversal candle like this, any type of reversal candle like I mentioned, that's going to give us a lot more confirmation. So ideally, let's say that we're looking at the market right now, it's about to be 9:45 and this candle is about to close. And we say, do you know what? Prices already hit our 0.62 level, but I'm going to take a long position right here. Usually what I do is I have mine, if you guys grab the long position, I have my stops usually below the 100% level. I like to give it a little bit of breathing room, and we could see that this is our previous low, so we may see price kind of do a stop hunt. That's why we want to put it a little bit lower. So I could put my stop right below this low. And then what I love is we have these 2 levels right here, the negative 0.27 and the negative 0.5. These are where we're going to target for our take profit. Now you need to understand with the Fibonacci's, they are mathematically derived. So the markets have a designated point that they want to go to. And I'm telling you, the fibs, these levels are extremely accurate. So we could say our stops are below the 100% level, and our take profit, we're going to have it all the way up here at our 0.50 level. 1.47 risk to reward ratio, which is not bad at all. Okay, let's say that we're in this trade right here. Let's play it back. And what we want to see is price move away from these levels very, very quickly. It's retesting it. Nice bullish candle. Boom. Look at that reaction. Within one 5-minute candle, it shot up 106 pips. That's what we want to see. So this is a really good example of a higher high, then a higher low, using our Fibonacci's with a reversal candle to catch a nice trade. Now let's go look at a lower low and a lower high. Here we have a high, price forms a lower low, then we have a lower high right here, and then price forms a new lower low and then a lower high. So now let's see how this setup would look. What are we going to do? We're going to grab our fibs from this high right here down to this wick right here. Let's delete this annotation. And what we're looking for is price to come into our 3 levels right here. And if price doesn't hit those 3 levels, we can still be looking for some type of reversal candle to give us confirmation. So let's play it back. We would honestly be looking to be sellers right in this area right here. And then what are we going to do with our stops? We're going to have it right above this high to be safe. TP down here. This is a really nice risk to reward ratio now. Play it back. Price comes in and retests those levels again. TP is hit. That's what you guys want to be seeing. This is a great depiction, and it's not always going to be perfect, guys. Sometimes it'll be hard to identify, but this is what practice will get you if you look at it over and over and over again. Now I want to give you guys some extra sauce before I get off this video. Let's say that we're going to take a long position right here at this higher low. We have our stops right below here, and our take profit, we're just going for this high, pretending that we didn't see it, but we know it's there. One thing that I have been doing, I'm going to give you guys 2 major hacks. Instead of you sitting in front of the charts and driving yourself crazy, simply go to this alert tab and set an alert. So we can see right here on the right, 5-1-21, 5100, 21 is our take profit, 5102 is our stop loss. So I can go right here and type in 5121.1 and I could put down here TP hit. I can make it only once. My notifications, I can have it whatever I would like, and then I can go here and create an alert. Now I have an alert right here that will notify me when my take profit is hit. Then you could do the same thing for your stop loss, 5102.6 stop loss hit, create. And I can drag this if it's not on point, just like that. Now, when I enter a trade, I'm also doing something else. I'm getting my Fibonacci's, and this is a major trading hack. Listen up, for all of you that are still watching this video, you're gonna get some major sauce right now because you weren't impatient rushing to the next video. I commend you. So I go from my entry once I figured out a trade, and then I bring my fibs to my take profit. Now what I'm doing is I'm getting the 50% level right here. I'm marking that up, deleting the fibs, they're just for visual help. And then I'm going through to this level and I'm putting something like take off 50%. Now, what am I also going to do? I have this alert right here at 5115, or I have that line right here deviating where my 50% level is from my entry to my TP at 5115. I'm going to make another alert, 5115, and I'm going to put the alert take off 50%, meaning that when price goes and hits this 50% level right there, I'm going to go to MetaTrader 4 if you're trading forex, or I'm going to go to futures and I'm simply going to take off 50% of my position, and I'm going to trail my stop loss to my entry. Therefore, I'm closing with profit on this trade, one, but two, this trade is now risk free. This right here is going to help so many of you guys out. Use this trading hack right here. That's what I wanted to share with you guys in this video. I hope you enjoyed it, and I'll see you on the next video. Peace out. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.